Welcome to our first lecture where I'm going to take you through the introduction to financial accounting. My name's Michael Kabwe. I'm your lecturer. I'm your lecturer in this course. Let's begin into it. Now, one of the questions that one would have is, what is accounting? What is accounting is a question that you may have when you have the first glimpse of the course. Now, we're saying that this accounting can be defined as the process of identifying, measuring, and communicating economic information to permit informed judgment and decisions by users of the information. Now, here we are looking at, you identify, you measure, and communicate. Okay, meaning you collect, okay, process, and analyze and communicate. Okay, now that is a basic principle. What it means is that accounting involves deciding what amount of money are, where, or will be involved in the transaction. Now, after buying and selling, after buying and selling transactions, okay, meaning that after you buy or sell, this is when this is when you get this type of data. Okay, so then organizing the information obtained and presenting it in a way that it is useful for decision making. Okay, now decision making, normally we are saying that accounting may not require a knowledge of mathematics, okay, but you do not need to be able to add. Okay, I mean you do need to know how to be able to add, subtract, multiply, or even divide. Okay, that is the basic, understanding of mathematical concepts or arithmetic concepts for you to be able to flourish in this course. Things you need to be able to do in your daily life anyways. Okay, yeah, like things that you need to do in, these are things that normal things that you need to be able to do. Otherwise you would not know, you don't know how much money you had with you, how much you would have if you spent some of it, or whether the change you received was correct. Okay, now meaning that it's a basic principle that all of us have, and everyone in this world, they are very prone to understanding, these basics in how to calculate money, no matter how unlearned you may be. But the fact that, with the fact that you are doing this course, or you are at the tertiary level, it means that you are able to add, subtract, or do all those simple basic arithmetic progressions, or arithmetic issues. Now, let's look at how, let's look at the history of, accounting. What is the history of accounting? Where is it coming from? How does it start about? Okay, so now let's get right into it. We are saying that, accounting began because people needed to do the following. One, record business transactions. Okay. For every business, of course, you need to record the transaction. You need to know when the business somebody comes to buy, you record that somebody has bought. So at tomorrow you don't forget, or the other day you don't forget that somebody bought this at that particular time. Okay. Now we are saying that the second is know if they were being financially successful, or and know how much they owed and how much they owned. Now, this is what was happening then. Okay, people need to record business transaction. People need to know if they were being financially successful, and know how much they owed and how much they owned. Now, if it is known to have existed in one form or another since at least, okay, 3500 BC. Okay, record exists which indicates its use at that time in Mesopotamia. Okay, now by then in Mesopotamia we are saying that people still anyways were conducting businesses. Okay, people were conducting businesses. Okay, now there is also considerable evidence of accounting being practiced in ancient time in Egypt, China, Greece, and Rome. Okay, now here we're talking about that. We are saying that one or the other, people still used to take accounting. They used to do accounting. Now remember, by then we don't know where Africa was. Okay, however, what we do know is that in each and every community, either civilized or uncivilized, there was a form, there existed a form of accounting. Okay, there used to be a form of accounting which helped them to record and know if they were doing better or not. Okay, now this indicates that the concept of financial accounting has been around for a long time. Now, concepts. Now, when we come to Pesili, okay, Pesioli. Okay, now this is a name, one of the very significant name in financial accounting when you look at the history. Okay, now this man looked at various things which even now they are in existence. One of the things that he looked at is private property. Okay, private property. Now the power to change ownership exists, and there is a need to record the transaction. Okay, now private property, we are saying that the ownership, okay, something that is in somebody's ownership, or something that somebody owns. Okay, then we look at capital. Of course, we talk about capital being a wealth. Okay, wealth which is productively employed such that transactions are if sufficiently important to make their recording worthwhile and cost effective. Okay, now we're going to see how the topic the definition of capital is fluctuating or is changing from the original, from this definition to what we are using today. Then commerce, we all know that commerce is exchange of goods on a widespread level, meaning that you are no, you know you are exchanging goods and services, at a widespread level. Okay, the volume of transactions need to be sufficiently high to motivate someone to devise a formal organized system that could be applied universally to record transactions. Now, commerce, we are dealing with exchange of goods, or we are dealing with trade at an international world, level. That is the whole world, okay, through the use of commerce. Then credit, we know that, of course, this is, getting goods, to pay later. Okay, so now these things used to happen even then. Okay, so you as a student need to be able to define these things in my course. Okay, writing. Now, writing is one of the mechanisms that is very important. Okay, because it permits recording of information. Okay, in a common language. Now, writing, all of us, wherever you are, whichever country that you are into, okay, writing is very important. And as a financial, accountant, there is a way that you are trained to write, where a person in Algeria, in Zambia, wherever you are, they'll be able to be what they'll be able to understand what you are writing about. Let's talk about a receipt. A receipt is known everywhere. You are in Rwanda, is here, but you'll be able to understand what a receipt is. You are in Pretoria, you are in UK, you'll be able to understand what a receipt is. So we are saying writing, which is in a formal structure, okay, which helps us to understand. Okay, then of course we know that money is anything that has got what? Value, and is acceptable for exchange of goods and services. Okay, and is acceptable for exchange of goods and services. Now, it is we are saying that there needs to be a common denominator for exchange. Now, meaning that money, it is something that is a common denominator to everyone when you talk about exchange of goods and services. Okay. Now, of course, as we talk about arithmetic, we are saying that as with writing, this has clearly been in existence far longer than accounting. Okay. Nevertheless, it is clearly the case that without an ability to perform simple arithmetic, there was no possibility that a formal organized system of accounting could be devised. Now, here we're talking about you having the ability to do simple arithmetic, multiplication, addition, subtraction, division. Those are things that will be very, very relevant. And then, it's a long time ago, but people had this capability. Okay, people needed to know what kind of things they were dealing with. Okay, now when accounting information was being recorded in the Ages, it sometimes simply took the form of a collection of invoice, which shows the details of a transaction. We know that an invoice records the details of a transaction, and receipts, which each confirms that a payment has been made. Okay, so now you as an accountant or financial accountant, you need to be able to understand what an invoice is. Okay, you need to know how an invoice looks like, and you need to be able to know how a receipt looks like. Okay, now a receipt, you need to on top of how they look like, you need to be able to define it, because I may ask you, okay, which were given to an accountant to calculate the profit or loss of the business up to some point in time. This practice persists to this day in many small businesses. Okay, now the accountant of the Middle Ages would be someone who had learned how to convert the financial transaction data, okay, which is the data recorded on invoice and receipts, etc. Okay, this person would convert this data into accounting information. Now, quite often it would be the owner of the business who performed all the accounting tasks. Okay, otherwise an employee would be given the job of maintaining the accounting records. Now, a business, as businesses grew in size, so it became less and less and less common for the owners to personally maintain the accounting record, and more usual for someone to be employed as an accountant clerk. Now, then, as the companies began to dominate the business environment, managers became separated from the owners. Okay, now are we seeing the transition? As the business grew, people were separated from the business, and as they were separated from the business, you know, and by then they used to, themselves they used to operate the business. Okay, meaning they maintain the accounts and do records and everything. But as the business grew, managers, people were being owners of business were separated from the business, and they introduced what we call account clerks. Now, these clerks, as the business grew, they introduced what we call business managers. Okay, now, the owners of the company, meaning shareholders, now came on board. Okay, often have no involvement in the day-to-day running of the business. However, these people contribute to the capital of a company. Okay, now this led to a need for some monitoring of the managers. Okay, now auditing of the financial records by accountant became the norm, and this effectively established an accounting profession. Okay, now I hope we are seeing how it came about. We are saying that first of all, managers, owners of a business are the ones who used to record and manage this account. But as the business grew, these people saw a need of having account clerks who could manage the accounts. Okay, but then as the businesses grew, we are told that managers came on board. Okay, now managers who were managed by owners of a business. Now these managers could report, okay, how the company is performing. Now, further, we are saying that owners of a company or shareholders became on board. Now, shareholders helped to raise the capital. Okay, now these shareholders never participated in the day-to-day running of the business. However, they received reports. Okay, now as it further, this also now changed or diverted into what we call into the system that we see now, because now monitoring of managers became vital, and auditing became vital to ensure that you understand how your people were spending the cash, how the money is moving in and out of the company. Okay, now the first national body of accountants, which is the Institute of Chartered Accounts of Scotland, was formed in Scotland in 1854. and other national bodies began to emerge gradually throughout the world. Now, it is from Scotland that you see this process started distributing to the whole, to all the world and different parts of the world, and in LDCs, countries like Zambia, Rwanda, and many other, literally all the countries in the world today have an understanding of this accounting knowledge. Okay, now we are saying that you know with the England Institute of Chartered Accountants being formed in 1880 and the first US national accounting body being formed in 1887. Now, after that, in 1887, we are saying that in US, that's when they, that's when they came, that's when this thing was formed, meaning that they had a formal board where they could manage the accounting or accountants. Okay, now when we've looked at the history, okay, you dig deeper and understand, you can go on online and search about this, and you'll find vast information about this. However, now, what are the objectives of accounting? Okay, you understand that every field needs to have objectives. Now, what are the objectives of accounting? Okay, we are saying that accounting has many objectives, including letting people and organizations know the following. Okay, it helps you, the owner of the business, or the manager, or the organization, know of the following. One, if they are making a profit or loss. Okay, of course every business not need to understand that if they are making a loss or profit, what their business is worth. Okay, what their business is worth. Secondly, they need to understand what a transaction was worth to them. Okay, one need to be able to understand, okay, was this transaction worthwhile? Have I made a marginal, benefit? Is there a profit there? Okay, how much cash they have? Okay, how much cash they have? You need to know how much cash the business has. Okay, how much wealthy they are, how much they are owed. Okay, how much people owe them. Okay, how much they owe to someone else, how much, what is the liability, how much do they owe, how much in liability do they owe. Okay, enough information so that they can keep a financial check on the things they do. Okay, now the business needs enough information to ensure that they keep, you know a check of what is happening and what they do. Now, the primary objective of accounting is to provide information for decision making. Okay, the primary objective of accounting is to provide information for decision making. Okay, now the information is usually financial, but can also be given in volumes. For example, the number of cars sold in a month by a car, dealership, or the number of cows in a farm head. Okay. Now, for example, if a business records what is sold, to whom, the date it was sold, the price at which it was sold, and the date it retrieved or received payment from the customer, along with similar data concerning the purchase it made. Certain information could be, produced, you know, summarizing what had taken place. Okay, so now we are seeing how vital this issue of accounting is. Now, the profitability of the business and financial status of a business could also be identified at any particular point. Okay, that is the objective of accounting. It is also the primary objective of accounting to take such information and convert it into a form that is useful for decision making. Now, information in accounting is very useful because it will help you, you know, make decisions. All decisions will be dependent on the information that you have. A proper manager or a proper accountant doesn't make decisions on nothing. They make decisions on the data. It will help you make decisions whether the business should close or the business should maintain. Okay. Now, how then do you communicate information? So we are looking at communicating information. Now, from the data that you collect from the business, okay, People skilled in accounting should be able to tell whether or not the business is performing well, okay, or the business is work, or the business doesn't perform at all, is redundant. They should be able to ascertain strengths and weaknesses of the business. Finally, they should be able to tell or communicate their results to the owners of the business or to others allowed to receive this information. Now, accounting is therefore concerned with one, recording the data. Okay, accounting is therefore concerned with one, recording the data. Two, classifying and summarizing the data. Three, communicating what has been learned from the data. Okay, now when you look at this, okay, when you look at all these things, these are basic gists or basic, importantness of accounting. Okay, now this was our first lecture. Thank you so much for for being part. See you in the next lecture where we'll be talking about different things relating to financial accounting. Remember to subscribe so that you are able to receive updated information and timely information on the next lecture. See you. Goodbye.